Well, good morning, good afternoon, and of course, good evening, traders from across the globe. Welcome to my 23rd edition of Short-Term Trading Live with Oscar. Traders, it's been an insane week. It's been a Rocktober, and it's probably going to be a very busy Friday. Please bear with me. I'm going to give you one more of these desktop shoot videos. I've had a busy week, some oral surgery this week, tooth pulled, whatever. I just don't want to get in front of the camera. I'll start up again on Sunday night getting in front of the camera, so I just wanted to give you the information in tonight's video. Forgive me. I'll see all you cats starting on Sunday, and I'll get back in front of that camera. However, E-mini S&P, very important market. This is very risky trading. It's risky no matter what you consider trading. Options, futures, ETFs, crypto, I don't care what you trade. Risky. Be careful. Put your stops in. Put them in first. Never trade without them. All right, traders, join me at livewithoscar.com if you want to hang out with me during the day and night in my live trading room. Let's get moving. E-mini S&P. Here is your E-mini S&P. Remove the bar. And we were looking at, well, let's just get rid of this little piece that just happened a few moments ago. We were here, and we said, getting under the 200 is going to be bad. It's going to get pulled underneath the 200 by other markets. And this is what happened today. It did actually get pulled under the 200 bar moving average. And yes, that's bad. OMNI has a red OMNI. Sell rallies for trading on Friday, 10/20/2023. For your E-mini S&P. Now, here's what makes this bad. Let's go around the horn here. Your Russell 2000 broke that 200 bar moving average eons ago and has plummeted, right? In a channel type formation, straight down, looks ugly. Yeah, it doesn't stop there. Your Dow Jones Transportation Average broke the 200 bar same time around that the S&P did. Well, a day before, I should say. So it broke it a day before. Now it's lower. Big component to the stock market, right? A huge component to the entire market piece is the Dow Jones Transportation Average, showing us that it wants to go lower than the 200. Then you've got the Dow Jones Industrial Average, and that basically has done the same thing with the same look. Has failed right around the 200 bar moving average and then dumped below it, settling much below it, great, a lot lower than it, I should say, than the 200. And I'll tell you right, it's not like it means so much to me, the 200 bar moving average. It means a lot to the street, which then it means a lot to me. If they were using the 0.895 to carry the one moving average, that's the one that would mean something to me. They're using the 200 on the street, so am I, baby. Whatever they use, I love it. So the street loves the 200. Hey, so do we. And getting below it is a sell signal, so that does look ugly. Now here is what we've got to watch out for. NASDAQ has been our shining star as far as which market has stayed out of trouble the most has been NASDAQ. But as you can see inside of this channel, it's basically trended down, back to the top of the channel, a little loop-de-loop, back to the top of the channel, down to the bottom of the channel, back to the top of the channel. Failure each time it hits the top of the channel. And we're on our way back down to the bottom of the channel, and here's what's scary about that. The bottom of the channel and the 200 bar moving average are right there together, conjuncting. So what I mean about scary is it looks like we could actually take a ride down there based on the analysis that we're seeing. The other markets, S&P, Russell, Transportation Average, and Dow are all below that average now. Looks like NASDAQ at least will head towards it on the downside. So that's not the best picture I've ever seen for our indices. So we will be selling rallies for trading on Friday. And then let me just show you another chart for one of our friends. Zabid in the trading room. He asked me about Tesla today several times, and I thought I'd show him a chart. Tesla, here's what I will tell you. It must hold 212, 210, 214, right there, that area. 212, so we'll call it with, margin of error, 214 to 210. It's got to hold that area. If not, you are going down to 200, then down to 192 in Tesla. That's what the chart's telling us. Must hold is the 210 area. So as I said, so that we don't get misquoted, the 210 area is actually, you know what, let me just type it so no lunatics write back to us. We are going to give it margin of error, so let's call it 214 to 210. This will be our margin of error. If it gets underneath that must hold area, which I am calling 212, you're going to hit 200, then 192. If it does hold the 212 area, we'll have a talk about that next. For now, it doesn't look like a market that wants to go up because you see how we broke this trend line? I'll turn it red for you. First, we broke the secondary trend line and make it a little thicker even so that you can see it. Then we broke the primary trend line, and that's not the best thing that could have ever happened to Tesla. So now you're going to test the 200 bar moving average, and then you're going to test probably my 212, 210 area. If that gets violated, we move to that level. If that gets violated, we move to that level. That's what we expect, Zahid. I hope that helps you out. And then finally, let's end this little foray with number 19, the gold daily bar. Traders, we gave you a target of 1945. You know what? Just for the exercise, let's take a look at this. We gave you a target of 1945 when we were trading about, I don't know, let's call it here. We were trading somewhere down here on this day, and we offered targets. First one would be 1945, and if we hit that, we'll offer further targets. Well, since that day, this is what happened. We got all the way up above the red channel to my 45 target. It actually hit. Boom, the target was there. Got above the target. We were sitting here on Wednesday. Thursday, a new bar populates, so let's get that into the picture. Thursday, the new bar populates, gets to the 200 bar moving average. Last time it got there, it failed. Time before it got to the 200 bar moving average, it failed. Why would you be buying right here? Because we're in a war, baby. The war is fresh. The move's not over. It goes at least to the 209. Then I'll offer higher targets from there. So the gold is a buyer of dips. NASDAQ, Russell, E-mini S&P, seller of rallies. Tesla as well until it proves differently. Traders, I hope all of this helps. Please like, share, and subscribe to these videos. I know you're hearing me like stuttering almost, but I'm still wearing down from the surgery and my face is still a little bit, it's a little weird. So here, listen. I'm pulling out my face. It still feels a little weird, so sorry for the stuttering in a little bit. But hey, at least I'm getting the videos out to you cats, and I do promise to get back in front of the camera starting next week. All right, so I'll give you higher targets in gold if we need them. Barring that, please like, share, and subscribe to these videos right now on YouTube. Then come join me at livewithoscar.com in my free trading room. No credit cards are required, no anything. Just fill out some information about, username, password, crap like that. You'll get right in the user channel. You'll get right into my chat room, and I will see you there. Thanks for tuning in. Good luck trading out there. And remember, no emotional trading. Keep your fingertips off that keyboard. Say this to yourselves. Are you with me? 1, 2, 3. Stop soar in. Emotions are rock and roll, traders. Thank you so much for tuning in. Sorry about the little stutters. I'm sure the medicine will wear off. And I will see you all on Sunday night for Monday. Good luck trading.